So our next panel is going to be on charting the new frontier of digital assets. So we're going to reset a little bit here. And then can I welcome to the stage Katie Ramsey, who is the head of FinTech at the UK Department for Business and Trade, Konstantinos Adamos, who's the group head of legal for crypto assets at Revolut Global Digital Assets, Reese Merrick, who is the managing director for Middle East and Africa for Ripple, and Usman Ahmed, who is the group chief executive for NBB. We're going to talk on this panel about digital assets, the next frontier, how they're being used, and what they need to thrive. It's kind of an area of finance that is evolving so quickly that I hold my hands up. I kind of struggle to keep track of what's going on. So perhaps we could start. Konstantinos, I'm going to start with you. Could I ask everybody to give some examples of the ways that your organization is using digital assets and kind of what the areas of development that you're kind of excited about are?
So thank you very much for the question. We have been an early adopter of digital assets, and one of the very first financial institutions to be offering this product to retail users. It's a relatively nascent area, and we've seen digital assets growing and entering the public discourse in a meaningful way, mostly in the past 10 years. And we have been offering this product to our retail customer base since 2017. We now have about 16 million customers who use this product. At the moment, we see primarily retail investors who most likely use it for speculation. So they anticipate that the value will increase, and that's why they buy this product. However, slowly we see that there is a shift, and we see institutions that use it for wholesale settlement, for example, collateral management. We see increasing interest in stablecoins adoption and what this may mean for things like cross-border remittances, for settlement. So these are all areas that we are looking into, and we are looking ahead at the future to see how we may be able to add value and offer this to our customers. The other thing that I think is quite important to note is institutional adoption. And I'm confident that the next phase of growth with digital assets will come from institutional adoption. We historically, over the past 10 years, we saw that institutions were quite reluctant to embrace digital assets, primarily due to the lack of regulation, concerns around financial crime compliance. And I completely understand that, because obviously if you are an institution that holds fiduciary funds, you need to have clarity as to the protections and regulatory guardrails that are in place. And the slow rollout of regulation, so we have MiCA in Europe, we see the UK slowly doing public consultation over the proposed regulatory framework. This is changing, and we see institutions more and more going into the digital asset space.
Thank you. Usman, MBB and Revolut are very different businesses. Could you talk to me a little bit about how you're using digital assets now?
Sure. Thank you, Joshua. For us, we see the blockchain technology broadly to be a natural progression of a 24/7, always-on sort of a financial world. And we did earlier in the year pioneer 24/7 US dollar payments as an example in Bahrain. Now, there is still friction in that process in the fiat world. And if we imagine what blockchain can deliver in that context, it will be a lot more quicker, it will be a lot more cheaper, seamless, almost instantaneous. And so clearly we are approaching it at two levels. First is, what can it do for the bank? And more importantly, what can it do for our clients? If I talk about our clients first, we are looking at ourselves at the intersection of where the traditional banking world operates with the digital assets world. And that intersection involves on and off ramp services, which extend into foreign exchange, remittances, cross-border payments, into custody, eventually when it comes to local currency securities underpinning stablecoins issued from Bahrain, for example, as well as then developing the other products, recognizing that digital assets are an established investment asset class as well, right? So like last year, we did the first Bitcoin-linked principal protected note out of the GCC. So developing additional yield-enhanced assets that suit the appetite of our client base from an investment perspective is another area that we're very focused on. And then when it comes to what does it entail for the bank, we are going to announce, actually as part of Fintech Forward, the adoption of a blockchain-based solution that allows us to do more programmable liquidity management. For example, if there are funds sitting in our overnight account, we should be able to sweep them in and out at the right point for us to be able to settle our obligations to our credit card scheme operators, as well as programmable payments. We don't need to rely on just banking hours, cutoff times, and the like for making payments. So there are several sort of use cases around this, and we are being fairly measured, but very optimistic at the same time on how we adopt it.
It's funny, isn't it, how quickly the whizziest new financial technology gets involved with these kind of age-old questions about how do we settle quicker, how do we settle more cheaply, how do we do things out of hours. It's kind of they're the kind of eternal questions for financial services. Katie, again, for the UK Department for Business and Trade, how are you thinking about digital assets? What makes you excited about them?
Sure. So obviously I'm not running a company. Actually, first of all, I'd like to say thank you very much to Grand Jazeelan for having me and for having our UK fintechs here. And I'm going to try and say something. Assalamu alaikum ala jamia. Hopefully I said it okay. But thank you for having us. So I'm not running a company. As head of fintech and the fintech team in UK government, our role is to contribute to the conditions, the policies that will help these digital asset markets thrive in a safe and prudent manner, and also to support the companies that are driving innovation in digital assets. And I think testament to the growth of this sector, we have brought out to Fintech Forwards nearly 40 UK fintechs, and a significant portion are focused on digital assets, whether it's in crypto custody, whether it's in tokenization of real world assets, whether it's crypto trading or digital identity related to safeguarding of digital assets. And I think that proliferation just emphasizes how prevalent and dominant this subsector is within fintech. And from a UK policy point of view, our Chancellor, Rachel Reeves, she announced our financial services growth and competitiveness strategy earlier this summer, positioning the UK as a global crypto hub leader in digital assets. And that's implemented via our Financial Conduct Authority, so the FCA, our regulators, crypto asset regulatory roadmap, which is aiming to have a full crypto regulatory regime by 2026.
Thanks very much. And Reese, Ripple is a business that has kind of changed its focus. It kind of since it was born. You started out in the payments world, which we've been talking about a bit. Now it's much broader in the way that you're thinking about digital assets. What are the kind of biggest kind of new ways that you've been using them?
Yes, and firstly, thank you for having me. It's a pleasure to be here. So, as you quite rightly said, Ripple have been around since 2012. So certainly, I would say one of the veterans in the blockchain space, and primarily our focus was payments. So we were looking at how we could utilize digital assets, notably the XRP and the XRP ledger, enabled to move funds cross-border in real time. And that still remains a very big focus of Ripple. We've turned over $70 billion in payment volume. Ripple Middle East have just received earlier this year our license to become the first blockchain-enabled payment provider from the DFSA in the UAE. So it's still a very big focus, but what we wanted to actually do is become more of an infrastructure player. We've been working with financial institutions, regulators for 12, 14 years now. And actually what they were coming to us and saying is, hey, we may not look at cross-border payments as the first use case, we may look at tokenization. And if we look into tokenization, we need somewhere to safely store those assets. So we went into market and acquired a company called Metaco, custody infrastructure, bank grade. So, serving some of the biggest customers like HSBC, BBVA, DBS. And what that allowed us to do is kind of implement that into our offering, layering on what we already, had in terms of a payment perspective. We then, through our payments perspective, saw a ton of interest with stablecoins. A large amount of demand. Primarily we were focused on fiat payouts in emerging markets. But what we found is that actually people wanted, USD-backed stablecoin paid out in places outside of the US. So we launched our own stablecoin, RLUSD, which is one-to-one backed by the USD, at the highest accreditation as it relates to regulation, having a trust license from the NYDFS. And we're starting to see a ton of traction there, from our existing customers and new customers.
Perhaps just because of that kind of journey over the past decade and a bit, Reese, I could ask about one of the biggest themes in this sector, the biggest themes in finance, in fact, which is trust. It's changed an enormous amount over the past decade, over the past 2 decades, in kind of crypto assets and digital assets more generally, and kind of institutions' attitudes to it and how to cultivate it have changed as well. How have you seen that kind of journey progress, and what do you think is needed now to make consumers trust these assets more?
So I've been at Ripple just over 7 years now, based in the UK originally, and I can tell you my early interactions with banks in the UK and Europe we're not very open. If you mention the word crypto in an early meeting, you'd kind of see them looking around, feeling a bit uncomfortable. Are they going to, call security to kind of have me escorted off the building? I think you fast forward certainly 5 years, and the last couple of years, it's completely flipped. And the same institutions, both in the region and globally, calling us back in to look at strategies and how they can implement. And I think there's a couple of reasons. I think regulation is key. I think certainly 7 years ago there wasn't really any robust regulation kind of anywhere. I think regions like the Middle East, specifically Bahrain and the UAE, have done a phenomenal job in providing clear frameworks which allow institutions to step into the space with comfort. I think there's also, what we're seeing is familiarity as well. So, if I'm a large financial institution and, I'm dealing with investments, and suddenly I can tokenize that investment and supply it to my customers who are already using it, and then I can use a fiat-backed stablecoin, which again removes the volatility. Essentially what it does is they reap the benefits from instant settlement, the speed, but they don't have the volatility that sometimes existed that people, I think, were a little scared of.
And I think to add to that, I think clarity, not hype. Clarity is what will drive that trust. And I think the markets can fall victim to hype. But I think if you bring digital assets under the regulatory standards and frameworks that we're used to in other elements of financial services, and that can help bring about trust and expedite adoption. And I think also, as Reese touched upon, is when it becomes more embedded and more habitual, then I think that as well just drives trust. And whether it's, if we look at around the world, if in say Latin America, where faster payment rails really drives adoption with PIX in Brazil, whether it's in sub-Saharan Africa and stable coins to facilitate cross-border remittances. Something I think that Bahrain does incredibly well as well is embedding digital technology into the population, into the everyday life of the Bahraini. Then that habit, when it's just embedded, also drives trust.
It's funny, isn't it? There's almost an analogy with with online shopping a few years ago, that something that seems like you might not get large groups of people to have trust in it, suddenly it becomes part of people's everyday lives, and it builds quicker than you might ever have thought. Konstantinos, you mentioned earlier, many of your clients use these assets for speculation. Obviously, they need to trust the platform that they're using for speculation, but they also need to trust the wider kind of digital asset system. What do you think there need to be changes in order to kind of improve that trust, or is that already happening?
So it's already happening, but there's more to be done. So if you think about capital markets as an analogy, what happens there? You have disclosure of information, and that removes information asymmetries. It leads to informed investment decisions, because ultimately, every retail customer is an investor, and when they buy or sell a crypto asset, they are making an investment decision. So I think a very good way to think about it is the standardization of disclosure standards. So historically, we've had every crypto asset token issue a white paper, but these white papers were done in accordance with market practice, so they were not standardized. MiCA, which is the European Markets in Crypto Assets Regulation, which creates a harmonized framework, introduces a standardized form of disclosure of information, and that means that every crypto asset that is listed on a platform has to disclose certain information, key risks, financial information, technology risks, and all the information that a reasonable consumer would need to make an informed decision.
Mm-hmm. Yeah, so it's about, and part of this is going to come from regulatory standardization.
Absolutely.
Right? Which kind of brings me onto our next topic. Usman, perhaps I can come to you on this. The regulation for all sorts of things to do with digital assets, whether it's standardization or anything else, it's not set in stone yet. It's still evolving. Do you see certain regions of the world becoming kind of standard setters for that? And if so, is that something that's happening here? How do you see the kind of regulation evolving, and who is moving first on it?
I think right now, if you see what has happened in the last few months, with the passing of the Genius Act and then the expected passing of the Clarity Act, clearly the US has taken a lead on providing that catalyst effect from a regulatory standpoint. Stablecoin volumes are at about $400 billion, expected to go up, depending on the bear or the bull case, probably to about 1.3 to almost like $4 trillion by 2030. That has been substantially underpinned, 99% underpinned by US-based growth. That's an example of how an enabling regulatory environment can actually serve to create leadership within a region or within a particular geography or country on digital assets. And I think in Bahrain, we've seen again, the Central Bank of Bahrain, as progressive as ever. They have issued their regulatory framework for stablecoins already. And so we see that clearly enabling regulations is an important task. But in addition to that, I would say that providing a regulatory framework that goes hand in hand with legal enforceability is very important. Because ultimately, if things go wrong, there needs to be legal recourse visible to the investors. And so that part has to be developed alongside. Plus, the critical role that regulators can play is around regional passporting, around regional ecosystems, around networks that are cross-border and that enable cross-border usage of digital assets. So there's a very important role for creating that overall sort of ecosystem that regulators can play. And then I think we let the fintech players and the banks, get on with their ambition and their implementation plans.
Yeah, it's that enforcement theme. It's sort of one we touched on earlier with Simon and Swarup as well. Sometimes the image of the private sector is that they just want laissez-faire, when actually what they want is clarity. They want to know, people want to know that these are the rules and they will be enforced in order to stick to them.
And I think that's what with Reece saying as well, of you've gone years sort of not being able to address the topic, and then you're suddenly asked in and please share your expertise.
Yeah, I mean, from our perspective, we've been, as I said, in the market for a long time. Our headquarters is in the US. It's fantastic to see the Genius Act passed, and certainly I think that will set a standard. What I would say is, beyond that, it's not been too fun to be a crypto, blockchain business based in the US. And really, I think that what has been quite refreshing to see in the digital asset space is it's been a bit of an equalizer as it comes to regulation, with new regions essentially taking the lead, Bahrain, UAE kind of being two examples of that. And as a result, we are a global business, but we're doubling down on this region, not only because there's clarity, as Katie said, is absolutely paramount, but because there is forward-thinking regulation which really allows FIs to flourish, to launch new product, to have it in a safe way. And that hasn't always existed in the US. We are very grateful that it is now, and we're looking forward to what's to come. But it's been great to see other regions take advantage of that.
Mm-hmm. And I think Bahrain has got a track record for this in terms of open banking. I think one of the first, or the first in the GCC to bring open banking regulation into play. And I think when you have rules plus innovation, that's what helps shape global markets.
Perhaps I can stick with you, Katie, on that. How do you see, as this evolves, what do you see the role being played by central banks versus the role being played by kind of fintech and kind of other financial institutions as this evolves?
Yeah, so central banks obviously to safeguard stability, and the deputy governor for financial stability in the Bank of England did a very interesting speech last month on sort of multi-money and the coexistence of traditional and digital assets. So I think in terms of central bank, obviously to safeguard stability, and we have in the UK the exploration of the digital pound. When it comes to other participants, so fintechs, driven innovation, shaped user experience, and then traditional financial institutions have sort of brought the scale, the liquidity, the trust. But I think what we're seeing more and more, and I think you mentioned it, Josh, on one of the earlier speeches or panels, that fintech is just become so ubiquitous now. We don't really, I think if we refer to financial services, fintech is all part and parcel. You don't have one without the other. And I think that's where the lines have become blurred between those sort of three participants that I've covered. Is you've got fintechs that are bringing the scale, bringing the liquidity. We've got Ripple, we've got Revolut as the perfect examples, and obviously MBB as well here in Bahrain.
So as this moves very quickly, we're having a lot of kind of new layers added to the financial system. It raises questions about how they're going to operate, how they're going to be interoperable, how the financial system is going to look. It feels like sometimes like this could exist anywhere on a continuum from kind of chaos to more resilience. Reese, as you look at these kind of multi-layered financial system that's emerging, what do you think it looks like? Like what does a system that uses this wide array of kind of different technologies and markets what does it look like to you?
Yeah, I think, typically, as I mentioned, we focus on large FIs, banks, payments. We have some real kind of use cases. Ripple has a part of the business called Ripple Impact, who essentially work with non-for-profit organizations. And really where we've seen kind of, I guess, the benefit and real benefit of digital assets is we partnered with a company called Mercy Corp, who basically received donations for Kenya when there's droughts, right? And preliminary and previously they'd be using, the traditional banking system once they've received those donations in order to settle them in region, which was very slow, problematic, and, large portion of the time the payments didn't even reach there. So we're now collecting donations in our stablecoin RLUSD. When droughts arise, we essentially settle that, and they instantaneously have it received in Kenya and off-ramp to the people who need it the most. So really, that's kind of, I guess, an example out of the traditional kind of rails and kind of projects that we're seeing, where real people are benefiting from real technology, and stablecoins are playing a huge part in that.
Mm. And as we see these kind of lots of different layers emerge, CBDCs, stable coins, tokenized assets, kind of all sorts of other digital assets. Perhaps, Usman, I can ask you, what do you need to see as you try to transact in all of these different areas, and you're also trying to transact across borders in different markets with different regulatory regimes? What do you need to see to make sure that it's all interoperable, that you can actually plug all of these systems into each other smoothly?
I think as your question indicates, we're not going to see any one system dominate. It has to be a combination of different systems working together as a network. Just like if you see today in the world of credit cards, we have the issuers, we have the acquirers, we have the merchants, we have the card schemes.
It's also a bit like the internet. It operates through a seamless series of protocols across borders. But I think it's going to be different for domestic versus international use, right? If we see today, I think 80% of the countries around the world, they have very frictionless, cheap, almost real-time domestic payment networks. And Bahrain has pioneered that in the region with its EFTS network, right? So the use case for stablecoin-based payments, for example, in Bahrain domestically would be more challenging to demonstrate today than cross-border payments, where it still can take 3 to 5 days, still has high correspondent banking charges and the like involved, right? So I think when we think about how these systems will interact, and let's not even put AI in the mix yet, but it will really be trying to develop use cases around domestic and then cross-border separately. And there might be some overlap, like now we have regional clearing systems, et cetera, RTGS, for example, within the GCC. But the important thing here is that there is a network effect, and different actors, different players are able to interface and integrate their solutions seamlessly for it to work.
Yes, that's so important, the network effect, right? Because it adds to the incentives, faster than exponentially as the network grows. Incidentally, my favorite example of a perfect use case for tokenization on improving settlement times, if anybody in the room wants to work on it, is that US junk bonds still take about 30 days to settle, which is just, every time I come across that fact, it's phenomenal to me. So if anybody wants to find a way to make that settlement quicker, I think a lot of junk bond traders would appreciate it.
I think the general velocity factor that people are estimating is around 50 times faster.
Yeah.
So that would mean that if we're talking about 1.3 or $4 trillion of stablecoin issuance, we're talking about $100 to $200 trillion of clearing capability, near real-time clearing capability cross-border on that basis.
Yes. Konstantinos, like Ripple, Revolut's kind of business model has evolved as the array of digital assets, the array of kind of layers to the system has proliferated enormously. What do you think this kind of new kind of multi-layered world looks like, and where do you see kind of challenges and opportunities in it?
So, is my mic working? Mine is working, okay. I think one of the important things that we need to be conscious about is that the barrier to entry that regulation creates. Obviously, Revolut is a big business. Ripple and BB, they're all big businesses. They have the ability to operate across multiple markets and penetrate these markets, but there is a cost to regulation, and I think you touched on regulatory nimbleness before. Smaller companies face challenges, especially because of the regulatory divergence and because of the lack of cross-border arrangements. So that is an important part of the puzzle, because obviously we want to protect consumers, but at the same time not stifle innovation.
Yeah, absolutely. On that theme, and perhaps we started out going out this way, so we'll come back along the panel in this direction this time. Conference is called Fintech Forward. We're looking at what a thriving kind of global fintech system, but in particular in the Middle East and the Gulf and Bahrain, looks like. What do you think, if you look forward to the next 12, 18 months, the next few years, what do you think kind of needs to happen, both from the public sector and from the private sector, in order for this industry to really kind of thrive?
I'll look at from a regional view, and I would say continuation of what we're already seeing. I think, part of this journey is about education. It's about educating as things evolve. Things are evolving very quickly in this space. I think the central banks have done a phenomenal job, certainly in Bahrain and UAE, to interact with fintechs, to interact with large FIs, to see how this technology can complement their businesses. And in turn, they're putting out regulation that is allowing for that to happen. But they're also able to iterate along the way. And that's key. I think a lot of jurisdictions globally have been grappling with how they regulate digital assets. So as a result, they don't regulate anything, and therefore then that doesn't give any clarity. And we see a lot of people moving to places where they can. So I think what I would say is, from a regional perspective, a continuation. I think a large amount of these, tokenization projects that we're seeing in the region, for them to really, hit production and start to see some kind of real traction and volume there. I would also say that there's a lot of eyes on the US, as we mentioned before. I think that, they're a bit certainly late to the game, but I think actually when they pass regulation, which is a bit more thorough, I think as a result, you'll see other geographies and regions continue to do the same. So, ton of excitement for myself personally being here in the region. I think we're still, and I say this a lot, we're still only scratching the surface in terms of what is possible. Tokenization and stablecoins will continue to be a theme that I think we'll see some real growth in, certainly over the next 12, 18 months.
I think you'll have any regulators in the audience grinning, because how often do regulators get told the thing that we'd like from you from the private sector is just carry on doing what you're doing. Katie, same question.
Yeah, I mean, how to follow that was really, really well summarised, Reece. But we've covered the regulatory clarity, the confidence through adoption and driving trust, and I think what you've mentioned there, the US. So I think collaboration between countries, yes. Interoperability being a forethought, being considered as we develop things rather than a consideration after the fact. And with the UK, with the US, we've had the recent, as part of the US state visit to the UK, we've had the Transatlantic Task Force for Markets of the Future, which will enable us to collaborate and learn from each other. And I think as well, events like this, the fintechs that we've brought out here, that collaboration, the government to government level, the regulator to regulator level, and the business to business level will really help drive things. And a final thought, please do come to the UK government booth and meet all of our fintechs so we can drive digital assets and beyond throughout fintech between Bahrain and the UK.
Yeah, so partnerships are going to be crucial here.
Absolutely. I said collab. It sounds a bit Instagrammy. You're right. Partnership is better.
Usman, same question to you.
We'd like to see a lot more trust being built in the system through the involvement of banks. We want to play our role in that journey. And that's how great financial institutions and systems have been built over the history, right? We've got a combination of trust and innovation coming together. We see there is an opportunity for us to facilitate that journey with respect to getting involved with the intersection, as I mentioned, between the fiat and the digital world. In addition to that, I think when it comes to the heart of all this, we're really talking about blockchain technology and the potential of tokenizing other asset classes. I think in the Middle East, there's a lot of understanding and interest in real estate. There's a lot of interest in commodities. And therefore, creating a digital marketplace eventually, like a multi-asset digital world, where banks can then, create balanced opportunities for their clients to invest in, would be part of our vision for the future as well.
Yeah, it's funny how every iteration of the financial system comes. Well, it's not funny. Every iteration of the financial system comes back to trust, because trust is the fundamental commodity of finance, and it's kind of something that you think often gets lost in kind of the furious waves of innovation. Is that digital technologies ought to make trust easier. Like, they actually ought not to be a challenge to trust. They ought to make it easier using things like kind of distributed ledgers, allowing greater transparency, allowing more disclosures and kind of standardized terms for assets. This should be a fantastic opportunity to improve trust in the financial system rather than a challenge to get people to trust a new bit of it. Konstantinos, finally, same question to you. What do you want to see over the next 12, 18 months, maybe even longer, to make this sector thrive?
I think more partnership between private sector and regulators and policymakers, proportionate regulation that strikes the right balance between consumer protection and fostering innovation. And finally, I would say interoperability. both in terms of technology, but also in terms of regulatory standards or regulatory convergence.
Yeah, thank you very much. Thank you everyone for joining the panel. It's been really interesting to hear your insights into this. Thank you.
Thank you.
Thank you.